Good evening and welcome to the Idea Hub by Softlogic Research. In today's session, we are focusing on the NBFI sector and its outlook for 2022. Let me quickly introduce the panelists for today's session. We have three well-distinguished panelists joining with us today, representing three leading finance companies in Sri Lanka. Our first panelist is Mr. Shamindra Mersilin, the Chief Executive Officer at People's Leasing and Finance PLC. We also have with us Mr. Arjun Gunaratna, who is the Deputy Managing Director at Centre Finance Company PLC. Last but not least, we have Mr. Kusa Jayawardena, who is the Deputy Managing Director at Alliance Finance PLC. A warm welcome to all three of you, and thank you for accepting our invite. Before we start the discussion, I would like to remind our audience to post your questions on the chat box, and we will take them as time permits. To start off the session, let me turn to you, Shamindra. We have seen significant changes in the industry dynamics since the start of the pandemic. We saw a lot of regulatory measures being imposed in terms of capital, interest rates caps were introduced, and a lot of moratoriums were also introduced. Can you help our audience understand how the landscape of the NBFI sector changed from pre-pandemic situation to now?
Okay, good afternoon, Mahesh, and to all those on the webinar, and to my fellow panelists. I hope you all can hear me.
Yes, we can.
Okay. Great. I just put my microphone on. I'm not the best person for technology, so you might hear my audibility fluctuate like the economic policies of the country are. Okay, so Mahesh, the question you asked was the change in the landscape, post the pandemic. I think the pandemic set in around early 2020, and prior to the pandemic, we had a very unfortunate incident in 2019, which was the April Easter attacks, whereby the tourism sector was badly impacted thereafter. Post-pandemic, we have seen, of course, some opportunities also that have risen in the industry. One is that I think with some sort of monetary policy easing, funding had basically come off in terms of pricing, and that advantage was taken by some of the institutions in terms of the maturity mismatches, whereby they were able to increase some of the margins and perform, I think, beyond expectation in a situation where the challenges were, quite enormous. The pandemic itself saw today, there is approximately 5 moratoriums that have been, rather directed by the central bank to help those impacted, and we, I think, are seeing the last of it as at 31st of this March. Now, what does that mean? I mean, that means basically, there were repayments on hold, interest was capitalized. Do we earn off this? No. So all those were basically impacting the, the sector. With that, obviously, things like seizing of vehicles and other directives to, negotiate early settlements, waivers of fees, etc., also impacted the, bottom line of these companies, or asking bottom line of companies. So, look, the challenges have been enormous. There have been good opportunities, and it also, as I think, rather accelerates the process of consolidation in the industry, which we have seen over the last few months, taking shape. Some of the companies are in talks. Some of them have actually, come to arrangements in order to look at, partnering or being taken over. So, yeah, that's basically an overview of the landscape that I could, give in a nutshell. I mean, open to the audience or yourself to ask me any other question if I have missed out anything.
All right, thanks, Shamindra. I think that gave us a good brief. Arjuna, if I were to pause the, if I were to, I think Arjuna went offline. Kusal, now, if I were to pose the same question to you, in your view, how has the business dynamics changed after 2020, and how has the business evolved in a post-pandemic environment? What is your view on it?
Yeah, I think in addition to what was mentioned by Shamindra, I think few good things that came out of the pandemic that we have seen. One is, I think, all businesses were forced to fast track their digitization efforts. And maybe what would otherwise take maybe 5 years, we managed to do within a period of 1 or 2 years. So that, I think, has brought in a lot of internal efficiencies and time saving for staff and especially the senior management. Fast tracking of digitization in terms of online meetings, online approvals, and reducing your field, branch level meetings. So all these things, and also giving more and more digital solutions to the customers. So that is, I think, one major impact that we see due to pandemic. And another thing is, I think this also open up various, I think, business opportunities in terms, for example, you see a surge for demand for gold loans because that's natural, because as people came out of lockdowns, especially the small entrepreneurs and individuals, they have cash requirements, and we were able to help these small entrepreneurs with their working capital requirements with gold loan. So that way, the business opportunities have also unfolded with the pandemic, which wouldn't have arose if we did not face this. And also, I think we were also, another important thing is more frequent engagement with our customers, because we were everybody was in a difficult situation, and as that forced us to work more closely with customers, understand their difficulties, and facilitate as much as possible how to make the repayments affordable to them. So that is another, I think, so that, I think, gave a good overall training to the branch staff, having more engagement, more relationship with customers. And as you know, when we help in this type of situation, the customer loyalty factor is of, that's a big thing that you can't value. And also, I think especially in 2020, I think we were also forced to look at cost optimization, because the situation was very uncertain. We were not sure what's going to unfold. So at the beginning, there were a lot of efforts to cost optimization that helped to improve internal efficiencies. And another thing is the importance of, I think, looking after your staff in difficult times. I think all these things have changed the dynamics of the industry and the way we look at the industry and our customers.
All right. With that overview on how the industry dynamics change over the past periods, I think we can move on to the future outlook. Arjuna, can I start with you on that? In your opinion, what would the future hold for the NBFI sector? Arjuna, I think you're on mute.
afternoon to everyone. Basically, actually, we have gone through kind of challenges actually, which were kind of unprecedented and actually kind of got us to actually relook at models, operating models, how we do business and so forth. So it has actually probably, as Kusal also explained, made us to kind of look at how we can improve our effectiveness or efficiencies. So with that background, actually, we are coming into a period probably which doesn't look too good, but we are looking at with optimism because yes, the economic background is actually fairly volatile. We are also actually very much dealing with mostly the bottom of the pyramid segments and more the kind of segment that actually supports the kind of new entrance to the say business world, and in terms of we are more or less the first financiers and actually build them grow actually the self-employed or the agricultural based communities actually mostly work around us. So with all of them being around, and of course very much being exposed to transportation sector, we are kind of constrained in terms of the credit expansion coming from the those sections. Add to that, of course, agriculture also probably has taken a bit of beating. But despite all that, actually, we still feel actually that segment of the people will require credit, and the place that they can access actually have been actually the NBFIs. So NBFIs actually have got smarter also in terms of actually identifying better customers. I mean, we have started using technology in terms of assessing customers, getting a kind of better credit assessments, credit ratings, or scores using machine learning, artificial intelligence. All those being combined in actually credit profiling has become say far more say better in terms of actually taking kind of more informed risk decisions. So with that, we still feel actually, despite the new assets not coming in, that within the existing market, because NBFI is always the strength was not entirely based on new vehicles coming in. We were very much actually stronger players actually more in the registered markets. So we still feel we have the strength, we have the skills, and there is a need for that segment to actually engage in the economic activities going forward. So we still feel actually there is actually scope for us to actually engage in. And of course, as Kusal mentioned, naturally with this say with this background, naturally there is a need for, because the disposable incomes are becoming lower, immediate cash is required. There are say kind of volatility in their own earnings. There is increasing demand for products like gold loans and so forth coming in. So credit expansion probably will be constrained, but we feel still if our hands are not tied from here and there, because we can actually work in this environment to ride through and actually assist this segment to actually come out of this economic recession. I think we can play a big role of course, we would need certain stability in some economic background, because we are essentially kind of companies engaged in term funding. So we need to manage our liquidity, and the interest rate mismatches also has to be managed. So unless that stability is there, that credit risk also that risk also gets priced into the product. So then it becomes less affordable for the customer. So with the experience in this situation of actually engaging customers better, and we feel actually we can work with difficult times also going forward. So may not be immediately, there may not be immediate takeoff, but the gradual progression. So I think most NBFIs are prepared for.
Okay, great. That was a very good introduction as to what the market what we should expect going forward from the NBFI sector. Shamindra, can I ask you your opinion on the future outlook of the NBFI sector? How do you expect the industry to grow with the absence of vehicle imports, and with all the macroeconomic concerns, how do you expect the NBFI sector to perform going forward?
Okay, so there are many challenges. I think Arjuna laid out some of them. Firstly, what I would like to stress is the issue that is happening globally. Right, the pandemic is not something unique to Sri Lanka. It's a global issue. So there are multiple challenges, especially because of the entire disruption to the supply chain. Now, are we immune from this? No. Sri Lanka, I don't think, is immune from this. And as we speak, what we see today are considerable challenges, macroeconomic challenges. What lies ahead is our ability to transform and become very nimble and agile in the way we do our business. And for that, I think we all need to basically transform ourselves from a mindset in order to, like what Kushal said, digitalize our processes. I reckon we started that process. And there's a lot more to go, but at least we have started that process, and that is going to help us to work more efficiently and more productively. Internally, do we have enough space within the sector? I don't think so, and I think rightfully the central bank is pushing for consolidation in order to improve the quality and make this sector more robust. And more operationally palatable, whether you are a local or a foreign player in terms of investor and other stakeholder requirements. International corridor connectivity is something that I would favor. I think, or rather, we have a good example. In the LLC group going ahead with investments overseas, and that has paid them off very well. And are there opportunities? Yes, I assume, or rather, I believe that there are opportunities which can be taken up, and we need to be very careful in doing so. But the opportunity is there. So that's an area which I feel, and especially from a people's leasing perspective, that we would look at expanding. We already have an operation in Bangladesh, and we would look at strengthening that. Likewise, within the close, region in terms of South Asia, etc. Do we need to do the same thing that we are doing? Excuse me. No, I don't think. I think we can diversify. We can get diversification. This particular period throws open many opportunities. And if you're smart, you would invest in the right manner, looking at the future. You pick the sectors which are growing and which are showing enormous potential, and invest in those. It's very. I think there's a good recipe for M&As. So you can diversify your revenue streams by looking at opportunities outside the NBFI sector, which will also strengthen your revenue streams as we go along. and hope that once the dust settles and the markets come back to some sort of equilibrium, the opportunities come back, because at the moment there are restrictions on import on vehicles being imported. I think with what we're in for, government spending for the infrastructure projects, unless they are priority projects, may also be curtailed under the circumstances, so which means construction will get impacted, and thus our exposure to the construction sector also is quite large, and therefore we are compelled to look at diversifying and looking at other opportunities. So there are good opportunities, I believe, in the IT sector, in the educational sector, in the agricultural sector, and also in the health sector, and mind you, the renewable energy sector. So creativity is important. We need to be very daring in doing things differently, because I think the bread and butter for leasing, people are becoming also very savvy now. The customers are becoming very savvy. And the demands are getting larger by the day. So all of that put together, agility and being very nimble is, I think, the way forward for us.
Right, great. Arjuna, if I'm to ask you, given the current macroeconomic challenges, do you think NBFI players would venture into new business verticals or sectors other than leasing, as Shamindra also mentioned? I think the best person to answer that would be you, given central finance being involved in diverse range of investments. What is your opinion on that?
Well, I must actually put it with a caveat at the beginning, because I think the regulator actually is now made it more and more kind of actually a key aspect to kind of concentrate more on actually your core operations, because for NBFIs they are becoming actually fairly focused on that. They are interpreting actually in terms of the Finance Business Act, in terms of actually the core area specified in that actually, and they want to actually kind of confine in those areas. There have been actually constant focus on that to strengthen on those aspects mainly, and of course the kind of trust has been actually look for more products, more kind of actually create more opportunities in terms of your own core operations, and of course the expansions through M&S and other development of other channels, and of course probably developing the digital infrastructure to kind of create more market competitiveness. So that is kind of the trust that we have seen actually the regulator has interest in, because I mean, coming from a background of a company which has been in kind of few diversified areas, there is a restriction in terms of actually investments that you can make in other non-core areas. So NBFIs actually cannot invest more than 40% on those companies. So that aspect is being strictly enforced now. So in future, all approvals actually for say expansion, of course, the verticals within the same operation, sometimes you have a good business case, sometimes convince and actually move on if it's in the financial services segment. But that also actually they're fairly careful, because they want to make sure that the NBFIs do not go out of track and actually build up a very healthy sector. So that's a fair call given actually what we have gone through. Given that actually the message that we have got is actually that try to focus on core aspects. In terms of diversification, it will be similar industries or actually building channels that feed in actually this kind of business or strengthen our business opportunities. Those are cases where little by little we are kind of actually making a case and kind of convincing the regulator. Besides that, actually the investment arms and so forth, those aspects actually we now have to do kind of more of it internally within the company and not expand too much in terms of actually the subsidiaries, because those are otherwise not fully owned subsidiaries. The opportunities arise if it all actually work with kind of a certain joint venture arrangement, because your investment is restricted to 40%. So those would be the key ways actually where you can actually expand into different areas. But in business related or business feeding, or actually what would strengthen your business channels, we would be able to work out some with the regulator and actually work out with some arrangement for expansion of those activities. So you may not like the banks, actually you may not see finance companies kind of actually diversifying too much out of the non-core areas going forward. That's a clear observation. If you actually look at it for the last 5 years, actually they have not given too many approvals to. But like if you want to promote channels like maybe cards operation or whatever it is, that's not. I'm just trying to take an example, but it sometimes may not be the most suited thing. Those things which are connected with financial services, they are prepared to kind of say have a fresh look at those.
Shamindra, can I put a similar question in a different way to you? I think you touched upon this slightly on your previous answer. Now, you have expanded your business or in overseas markets. Similarly, few other local companies also have presence in these foreign markets. What is your strategy going forward, and will you be looking at further expansion? And also, I'm just curious to know the reason for expanding overseas. Is it because the Sri Lankan market is not growing, or just that there is more growth opportunities in overseas as much as in the Sri Lankan context?
I think you answered Mahesh, I think you answered the question yourself with the last 2 points. So it's a combination of both. And what's our plan? We have our operations in Bangladesh. Are we keen to look at elsewhere? Yes, we are. Will we go about it in a very prudent manner? Yes, we are. We will look at it from a microscopic angle. We will basically be very cautious in the way we're going to go about it. And then when there is, or if there is a right investment out there, we will look at it very favorably. I mean, obviously, for reasons of competition and my rivals being on the call, I can't tell you exactly where we are looking at, but I will basically slip in a a hint or two in terms of international corridor connectivity. And I think that brings a lot of other synergies which Sri Lanka can also gain from. The moment you go overseas, you basically experience different markets, you face different situations, different scenarios, which can also add a lot of value to your operations back home. As I said, it will be a very cautious approach, but it's not something that we have ruled out, even under these circumstances.
All right. My next question will be to you, Kusal. Now, we have seen central banks' master plan on consolidating finance companies being fast-tracked over the last couple of months. Can I have your view on the current consolidation that is taking place in the NBFI sector and how this is going to impact the sector?
I think altogether we had 40 plus players in the market, in the country, on top of commercial banks and other specialized banks. So, and the finance companies' market share is overall with banks is very small. And in this small market, with 40 odd players, I mean, it becomes very intense competition, and as a result, I think the long-term sustainability of smaller players, especially the smaller ones, has become questionable. And as a result, I think central bank has rightly is working on a consolidation program. And we can see that the consolidation program this time is on right track, and we see the central bank basically segregated these 40 odd companies into 3 segments, category A, B, and C, and then to see how category A companies can merge with category C companies, so that the category C companies which are having weak capitalizations or which are having issues with their sustainability would have to eventually merge with a category A company. So I think that will ensure the stability of the sector and to increase the public confidence towards the sector in the long run. And I think because of this, I think the concentrated effort by central bank, we see that some of the smaller companies have successfully raised their capital and strengthened their capital adequacy ratios. So which means that they can stand on their own without merging, and few other companies are, I think, have already announced their merger plans. So I think it's on track, and we would see number of players reducing, and I think industry would end up with large to medium-sized players in the medium term. But one disadvantage of this is that each of these players, you have larger players, mid-sized players, smaller players, each of these players are serving to a different market segment. And when these smaller players get absorbed to a medium or larger player, whether there will be a vacuum in fulfilling the needs of these segments served by the smaller players is something that that concern is there. But otherwise, I think it's on right track, and we would have a more stable and robust sector once this currently ongoing mergers take place.
Arjuna, if I am to turn back to you, the current macroeconomic situation is a major concern, not only for the NBFI sector, but for all the businesses and sectors. I think our audience would like to know about your expectation on the asset quality of the sector. If you can give your views, I think that would be great.
Basically, actually, we went through actually a very hard period, actually, even before, as Shamindra mentioned, actually, it started before actually COVID also. And for the last 2 years with COVID also, actually, we've gone through it, and actually we had most of the enforcement processes being kind of curtailed. Despite being curtailed, actually, despite the customers being actually impacted or affected, kind of businesses looked at working around with engaging the customer and actually working out better solutions for them. And that actually, if you see if we started from 2020, by end of this 2021-22 financial year, most of the companies are kind of actually getting back to the pre-COVID asset quality levels. So we have kind of actually come through this period virtually on our own, working with, in the sense that what I mean is less support for many else, and it has been a kind of engagement with more with the customers. Of course, the monetary policy to an extent kind of supported to ride through that period. So in terms of actually engagement, in terms of actually acting upon kind of early to kind of actually assist the customer, kind of put him actually to a better track, discipline him more, kind of those aspects. I think most companies actually have learned new actually ways of doing it. I mean, we have shown that actually without repositions, actually we can do business, say, still fairly profitably. So when you now central bank has actually made a kind of indication that they intend actually unwinding the moratoriums and kind of actually getting back to normal conditions in terms of actually relaxation of certain enforcement acts as well. Those also will actually kind of actually become more supportive in terms of asset quality management going forward. On top of that, actually, most assets that we have been lending against have been appreciating. So the loan to values also have been kind of, the exposures have been dropping because of the appreciation in values. So all those actually have been contributing towards actually kind of customers' commitment also being actually improving, of not letting it go. So we feel actually all these mechanics will be working in the similar fashion in time to at least the next financial year. Of course, the key concerns would be how actually say prolong this is in terms of the basics of, because we can't go on without fuel and energy because that will cripple entire infrastructure. So we expect that part to be sorted out. I think if those are actually kind of taken care of, the businesses will actually also find ways, because as you can see, despite all these challenges, this country's exports grew over the last 12 months. So people will find ways of actually getting about, even agriculture, even though the fertilizer was not there. It's they have actually worked on rebuilding some part of it. So feel all those actually also will kind of strengthen somewhat more, and those will support in terms of customers' ability to service their obligations also. So all in all, there will be pressures, because we do expect some say interest rates kind of aspects to be on the high side. Maybe the forex markets will all have its own challenges, but overall the asset quality is actually, we got a bit smarter in terms of managing it. So we feel we do have kind of areas to improve, and probably get to the next hurdle, even in these challenging times.
Moving back to you, Kusal, now over the past, NBFIs have maintained very high margins, but recently there have been accusations by different parties saying that the margins maintained by the sector is too much. With these developments, do you think the current margins could be maintained going forward?
Yes, this is a. I have a different view on this issue, because margin is a factor of few things. Now, if you look at the banking and finance sector, you have larger banks, mid-sized banks, and smaller banks. And similarly, finance companies also you can categorize into three. Then you have microfinance companies. Then you have cooperative societies who are lending. Then eventually you have informal segment, right? Now, from larger banks, bank who is lending, let's say, a single loan of 1 billion rupees at 8-9% to a informal lender who's lending at, let's say, a 50,000 loan at 10% per month. All these players are fulfilling a particular need of the market, right? So what will happen is, when you try to, if one, without knowing these different segments of the market, if one only look at the overall DIMO margins of a financial institution and say, your margins are high, you should try to shrink, effectively that will cause those financial institutions to give up these market segments. And when registered finance companies, if they leave out these segments from the market, they will end up with loan sharks, where they will have to pay maybe 10 times more interest on these loans. So in that sense, because on the other hand, central bank also has in its financial inclusion strategy, they have a very clear mandate to make financing available to the grassroots levels of the society. And based on that survey, only 52% of the borrowing requirements of people are met by the banking and finance sector. The 48% is met by informal sector, right? So when you take all these into account, right, it's not fair to generalize and say the sector's margins are higher and it has to come down. That is not a fair assessment. And as long as we are talking of, and the second aspect is the operating cost. A bank that is lending 1 billion rupee corporate loan versus let's take a microfinance institution that lends, maybe it needs to lend several hundred loans to build a 1 billion portfolio. The operation cost structure is very high, right? Operating cost alone might be 8 to 10% of the portfolio for microfinance sector, right? So it depends on the product mix, your market segments that you're operating, and what your market segments you're planning to penetrate in the future. So it's a combination of things. So you can't just make a general statement saying that finance companies' margins are high. It is high for a reason, to absorb that additional operating cost and the credit risk in operating in these segments. That is why finance companies generally have a high NPS than banks. And similarly, the different finance companies have different NPLs because they have different risk appetites. So that has to be factored in the pricing and eventually in the margin.
Right. I think with that overview on the margins on the NBFI sector, I think we can move. Kusal, one more question to you on the technology side. Now, globally, we are looking at cutting down on physical branches or physical networks. But in case of Sri Lanka, we are still seeing NBFI players opening new branches. In your view, what should happen to change these dynamics?
Yeah, I think it's probably you need a mindset change for the sector and maybe even for the banking sector, because most of the time we see finance companies only as into vehicle financing business, and in relative terms, Sri Lanka and also our sector has been slow to adopt technology, right? So I think with digital financial services, I mean companies adopting digital financial services and fintechs start showing more and more traction in Sri Lanka, and also need to manage costs with increasing competition and rising inflation, I think the sector would be forced to think of concepts like maybe, I mean, the concept of physical branch will no longer be relevant if you can facilitate the client and give a better experience using technology, right? So in that sense, maybe apart from gold loans, rest of the business, one can transform the business to be conducted mostly on digital channels without where the physical branch is not that much relevant to the business. So I think eventually the industry would have to move there, but it might take some time, because as I said, it's a cultural thing, it's a mindset thing, where when you say branch manager, people expect a physical branch with nice name board. So I think the faster I think industry adopts technology, faster we would be able to go into a branchless model.
On the same topic regarding the technological improvements in the NBFI space, Shamindra, what kind of initiatives have you taken, and what is your view on the adoption of technology by the sector?
Okay, so I think I fully endorse what Kushal said. The brick and mortar seems dated, and we need to look at reaching out to the customer in very different ways, more efficient ways. So for people's leasing, we are an establishment that has over 100 plus branches and window officers. And what we've done now is to right-size these branches. I'll just tell you step by step some of the initiatives we've taken. We are right-sizing our branches and looking at in terms of the regional footprint and the number of staff we need to have, and then right-sized according to that. So we really don't need big branches. So we cut down our rentals, etc., in terms of expenditure. In terms of digital technology, what we have done over the last year or so, internally we have moved and aggressively moved towards a paperless office. So we don't sign, we don't engage day-to-day operations on documents and files, which was the case some time back. So we are on to e-signatures and what is known as e-memos, which has considerably cut down the paper wastage and paper use. On top of that, we've invested in a few applications. One is we rebranded and relaunched our customer app, which is in trilingual form, and which also helps improve financial literacy, which is very important. Because and it's a journey in terms of the digital transformation. Whilst we are adopting and investing in digital technology, we need to also assist the customers to embrace this, because there's no point in us going in one direction and the customer perhaps being intimidated by this. So we need to be very simple in our approach in ensuring that they buy into this. We've also initiated what is known as a credit app, where we really don't need to get our staff to come into branches now, apart from our support staff. So the frontline staff can be anywhere where they can engage the customer or prospective customer, and all of the information is basically brought into this app, and then we process their loan application. What does this mean? It means that we don't have to be sending our courier 3-4 times, from head office to all parts of the country. It cuts down a lot of expenditure, and also it helps us to contribute towards, the carbon neutrality, because the more you get motorbikes and vehicles to travel on the road, then of course, you're just contributing to it. And then, so phase 2 of the entire process is our web-based credit application, which would then mean that, anyone, and our concept now is at People's Leasing is everyone sells. So including me, if I happen to meet someone at a function, or happen, need to speak to someone, or someone speaks to me, I'm able to basically upload all the information and just send it to a credit hub, which will evaluate and come back with the answer in terms of what can be done. So those are the type of things which we have initiated, and we've automated the entire documentation process. Again, we don't have to be sending documents up and down to branches. It all gets scanned, and it's through a digital process that it is coming into head office for the various assessments, reviews, etc., and then finally the processing of the loan. What I want to emphasize here is the fact that this is all done in-house. This is all done through my IT team. We've not purchased a single software. We haven't gone to any outside vendors. And it just shows that, we have enough talent, not only the company, but in Sri Lanka has enough talent. And this is what I'm trying to allude to in terms of what I mentioned before, in terms of diversification. Yes, there are restrictions. We have a decent portfolio of subsidiaries, which we are looking at, further investing in terms of infrastructure, and, going out to look at opportunities, given the fact that the market is very conducive. So the digitalization process that we've adapted hopefully will give us the platform in the next 6 months or so to be very aggressive, and also to work very efficiently, which I think is very important for an institution like People's Leasing. Since some time back, look, I'm an ex-bank, and I realized, I remember how there was competition amongst banks to open branches. There was this competition to basically, open X number of branches per day, and there were full paid advertisements. And COVID has basically, made a full stop to that, and made you realize that, we have to really change our model and do things differently. So that's what we will adopt, and that is what we started in terms of our transformation in digital journey.
All right. Thanks, Shamindra.
Manish, I would like to add something there.
Sure.
I think with the technology, advancement of the technology, and if you pick right technologies, the boundaries between banks and NBFIs are getting blurred. And apart from maybe things like, because the current account is no longer is a necessity with digital payment solutions, right? So apart from foreign currency transactions, if a particular NBFI has the necessary skill set and the technology, you can even in apart from vehicle financing, in any credit product or any deposit product, the finance companies can compete with banks. Other thing is, I think when you talk about technology, I think the industry is also looking at some companies may have already adopted the database credit scoring models that will help to manage the risk better, credit risk better, and that will guide the industry to see what products, what sectors to grow, and where to put restrictions.
There are many questions flowing in, but with the limited time, we might be able to answer only a few. On the same line, there is a question on how far the sector has used data analytics to make better decisions and reduce cost, and what sort of importance and investment is the senior level is willing to give for better and optimized data analytics compared to other priorities such as business development and marketing. Kusa, you want to weigh in on this angle?
Yes, I think in our case we have we still haven't adopted the BI tool, but we have a very strong MIS system, and we are using data analysis to a very great extent to identify and identify the portfolio risks in different ways, and that has really helped us to improve our portfolio quality. If you look at our figures, I think over the last 3 years, our credit quality has improved significantly, both NPLs as well as 90-day PAR. So that is mainly those fine tuning of our credit criteria is based on the MIS data analytics support that we are getting. So with we are in the process of implementing our core banking system. So once that is completed, we are also looking at BI tool that will get into more, where we will be in a much better position to do data analytics.
Yeah, Mahesh, I could add on actually. These are things actually which we really made use of and actually did succeed in the last few months actually, where we put this into use, predictive analysis, actually behavior analysis, apart from the AIs or even some to an extent machine learning. We have actually come through a path actually where we have kind of feel that actually that has given us good results actually. That's showing actually where we can actually optimize our usage of resources, especially, just because one customer defaults one rental, behaviorally you can predict actually whether he's going to default or not, at least in terms of a probability. Then likewise, so we have to target actually in terms of actually increasing our speed in terms of servicing, because customer credit evaluation have become so much faster and actually more kind of logic based in terms of actually credit profiling systems or credit scoring systems. So Fed said those will actually be evolving and actually will definitely kind of be a game changer in the coming years, even for these so-called bottom of the pyramid segments, because they may not have actually bank statements or things to support, but actually this credit profiling and techniques which you adopt through digital infrastructure actually is definitely assisting, especially the speed in terms of making good decisions also.
All right. It's certainly interesting to see that the local NBFI players are also catching up with the overseas markets and the technology that they're adopting. There is a question on the interest rates increasing. So the question is, with the increasing interest rate environment, with the majority of the loan book being fixed and deposits getting repriced at higher rates, can the sector maintain earnings? Shamindra, you want to take that?
That's a trick question. Obviously, the objective is to maintain the earnings, but given what is happening around us, the margins will come under pressure. There are inflationary pressures, rather that we are facing today. which means that there would be some rate hikes when interest rates are concerned. So I mean, look, as I said, there would be stress on our margins. We will have to work more smartly. We'll have to look at how we could, manage our cost lines and do what is best. So it is a challenge. I mean, I don't think we can shy away from that, given what is happening around us. But it's about pricing your risk appropriately. And we spoke about data analytics. And this whole industry. I think we need to come together to better understand, to better profile our customers, and to ensure that we don't end up in a rate war just to increase market share, since there are these restrictions which we are faced with, and perhaps we are constrained by some of the restrictions such as the importation of vehicles, etc. Second, that the used car market has gone up in price, so which means that there is now a lot of trading taking place. People are using that to, raise capital for perhaps startups or even their own little SME proprietorship businesses. So it's all about how we don't have to, and I think we need to be very smart in the way we do this to ensure that at least the current level of margins are maintained. Where the industry, I think, is an average around 8%, if I'm not mistaken. I see through this, next year and a half of challenges. So that's my take.
I think we can take one more question before we wind up the session, given the limited time we have. There is a question on identified, diversify. I think this question we have answered on the diversified opportunities in the NBFI sector. Maybe we can move on to the next question. Gold loan book of NBFI players expanded significantly during the pandemic time. What is your take on this? Kusal, you want to take on that question?
Yes, I think the gold loan is, if you look as a product, it is one of the very important product that creates access to finance to bottom of the pyramid customers, and it is a over-the-counter product. There it doesn't take. I mean, within few minutes you can meet your requirements. So that is why this has become a very popular product across, across the sector as well as in banks. So because of that convenience factor, it's getting popular. So there are two reasons why the demand for gold loan picked up with the pandemic. One is the real demand for credit increase because of the lockdowns, people lost their income, and for their family emergencies, they need money. Secondly, the small entrepreneurs, when they want to restart their businesses, they needed working capital, and this was the only way that small entrepreneurs had access to working capital through gold loans. So those are the two reasons for increase in gold loan volumes. So that is the one reason. The second reason is increase in gold prices. Gold prices have appreciated significantly. So even so, that also has helped to increase the lending volumes. And I feel this current momentum that we see in gold loan market will continue because given the emerging economic conditions in the country where cost of living is increasing and prices are going up rapidly, both individuals would have their cash requirements as well as the small entrepreneurs, their working capital requirement will increase with the increase in prices. So because of that, I think this momentum will continue in the short to medium term. And from our perspective is also, I think from risk return perspective, this is one of the best products if you manage the risk properly, because and it is also very capital efficient product, because up to 70% LTV, you don't need to allocate capital for gold loans. Yeah, that's my take on that.
Right. Thanks, Kusal, for that insightful brief on the gold loan side of it. I think we have taken a considerable amount of questions with the limited time we had. Once again, thanks Shamindra, Arjuna, and Kusal for joining with us today, and for the most importantly for the insightful session. So that brings us to the end of our webinar on the NBFI sector, and hope to see you all on another insightful session soon. Thank you very much for joining in, and have a wonderful evening.
Thank you.
Thanks, Mahesh.